Good afternoon, everyone. I'm Richard. I'm your host for this evening, and I'll be speaking to you on a couple of things. First of all, I'll be speaking to you about the overview of natural gas itself and placing Trinidad and Tobago in the global context of natural gas. Then I'll very quickly move on to the history, overview, and importance of the natural gas industry to Trinidad and Tobago. And finally, I'll be speaking a little bit about the natural gas value chain. So, if there's a couple of things I wish you to take away from this presentation initially is that just three main points. One, Trinidad and Tobago, we still remain heavily dependent on hydrocarbons, and for the most part, this is our gas industry, our gas-based industries, our methanol, ammonia, and urea plants. Given our small size, we managed to actually do a lot with the resources that we've done. Okay, we've done a lot with the resources that we've had, and that's pretty much been due to deliberate policy decisions. And finally, we've created a lot of value from our natural gas reserves and from our gas strategies. Okay, first of all, I'm just going to start with the overview and natural gas in a global context. And for those of you who are following out there, the presentation will be available after on video. Basically, well, let's start with natural gas. Some of us don't know what it is, so let's look at it. What is it? Essentially, it's colorless, shapeless, and odorless gas. It comes from the earth. It's pretty much clean burning, which means that it doesn't emit a lot of harmful byproducts, no carbon residue and whatnot. And it's actually pretty much more clean burning than petroleum or coal or pretty much other fossil fuels. It's generally in its natural state, a combustible mixture of hydrocarbon gases, and because it doesn't smell, we usually have to put an odorant in the gas so that we can detect if something is up with the gas that we deliver to the engine, if there's a leak in the line, because normally gas doesn't have a smell. Pretty much it's a fossil fuel, just like oil, just like coal. What's a fossil fuel? This generally means that it is the remains of plants and animals and microorganisms that lived millions and millions of years ago. So essentially gases, dead plants, dead animals, dinosaurs, what have you. Typically the composition of natural gas is primarily methane, which is actually what our downstreamers would tend to use in their production processes, and it's also got some heavier fractions. For those of you who do chemistry, things like ethane, propane, butane, carbon dioxide, oxygen, nitrogen, hydrogen sulfide, rare gases, hexanes, pentanes, heavier fractions. Essentially, what we tend to do over in the midstream is actually we strip out some of the heavier fractions, your propane, your butane, your natural gasolines, and we strip those out of the gas stream and export those for value. And so essentially what downstreamers get is just pretty much pure methane. Now, depending on where you source the gas in its natural state, it will have a greater or lesser portion of methane. For example, gas off the estuaries generally has a much higher proportion of higher chemicals than does gas off the north coast, which is almost pure methane, which has implications for downstream use, actually. Types of recoverable gas in Trinidad and Tobago, we generally concern ourselves with conventional gas, whether it's associated with oil deposits or whether it's not with any oil, it's non-associated by itself. In other jurisdictions, you will also get gas from coal bed methane, you will get gas from tight sand, and you will also get gas from shale. Essentially, what shale gas refers to, and it's generally natural gas that's trapped within a shale formation, and shale generally is just fine-grained sedimentary rock that's a good source of petroleum and natural gas for those countries that have it. You generally get gas from shale through a process called hydraulic fracking. Essentially what happens is that water is delivered to the well site. Truck injects a mix of sand, water, and chemicals into the well, Shale is fractured by the pressure inside the well caused by the water, sun, and chemicals. Natural gas thereby flows out to the well. The recovered water is stored and then taken to the treatment plant, and the gas is piped to the market. It's very important because over the past, let's say, 5 years, it's actually become a major source of natural gas production for the U.S., who happens to be one of our main export markets for gas. Essentially, where shale? Shale is generally pretty much where you would find natural gas. Lots of deposits in the U.S., Canada, Brazil, Argentina, Russia, China, some in Australia, some in North Africa, some deposits in South Africa, some deposits in Europe. And in terms of recoverable gas reserves, essentially what we're looking at is that Russia generally has the most reserves out of any country in the world. It's closely followed by the US and China. And to put things in perspective, global reserves generally tend to be around 208 trillion cubic meters. Trinidad and Tobago has something like 0.2% of that total. So it's much less than 1%. We're pretty much a small fish in a very big ocean. In terms of the US production, what's actually been happening is that over the past 5 years, shale gas has been an increasing part of their gas production, and we expect by about 2015 or so, they will actually be exporting natural gas as opposed to importing it, which may have implications for some of our natural gas exports in time to come. I'll get to that. So finally, just to put our resources in context, Trinidad and Tobago, pretty much a small player in certain things, less of a small player in certain other things. We don't have a lot of gas reserves, just 0.2%. We do consume a good bit more than, in terms of global consumption, we do consume 0.65%. That's pretty much because we have a lot of gas-based industry. That's pretty much because we do produce a lot of oil as LNG, and as well as produce a lot of natural gas as a base for downstream use. And we are also responsible for 5.7% of global LNG trade. Essentially, what's been happening over time, if you going back to reserves to production, global reserves and global production ratios, what's been happening as expected, just like oil, Middle East is pretty much the biggest source of gas reserves. And in terms of what's been happening in terms of reserves to production ratios, in most cases, these have been declining over time as, in fact, gas use has ratcheted up. What's been happening in the U.S., notably because of shale gas and the effect that's had on production, their RP ratio has pretty much stabilized. And I'll get a little bit into Trinidad and Tobago's reserves to production ratio a little later. In terms of gas reserve, over time, if you take 10-year increments between 1992 and 2012, we have a lot more gas reserves available. It's gone up from 117.6 trillion cubic meters to that looks like a 187 trillion cubic meters. What that means, generally gas reserves have been going up, although 2012 over 2011 we did record a small decline, and it's important. In terms of production and consumption generally mirror each other, with a small dip in 2008-2009 due to the Great Recession globally. And in terms of consumption, you have a slight rise in Asia Pacific regions because you've had natural gas being substituted for nuclear power, given what's been happening with nuclear power in Japan since the Fukushima disaster. So they've actually been not using nuclear and substituting that with natural gas. So that led to a significant rise in natural gas imports to that region. In terms of consumption, again, Um, America is still very far the biggest consumer of gas, followed by Russia, Iran, China, Japan, the usual suspects. In terms of what's been happening globally, the world consumes 3,314 BCM of natural gas. Trinidad and Tobago is responsible for 21.7 BCM of that, again, primarily because of LNG. In terms of consumption per capita, it's actually fairly high. That's pretty much because we have a lot of world-scale plants and not a lot of population. So it's going to be pretty high relative to our size. If one looks at the map, the biggest users, the US, Canada, Russia, Saudi Arabia, Iran, Iraq, Ukraine, a couple other countries, Australia, Argentina, Venezuela, heading up there. And in terms of trade, you get two types of trade. Pipeline trade and LNG trade. In Trinidad and Tobago, we tend to do LNG trade, and according to what's been happening in the market, we generally export to three main regions. We export to the US, we export to Europe, and we export to South America, most notably Argentina. We've actually been shipping a lot to Argentina in the last year, pretty much as a consequence of shale gas keeping the price low in the US. And in terms of prices, what this price chart actually shows is that, in fact, apart from Henry Hub, oil prices have generally been fairly decent globally in the past couple of years, with the notable exception of Henry Hub, which again, because of shale gas, the price is low. Right. Having tried to put natural gas in a global context, let's get down to Trinidad and Tobago. Right now, we're just going to do a little bit about the history, a little bit about the overview of the sector in Trinidad and Tobago, and try and just touch a little bit on the importance of the natural gas industry to Trinidad and Tobago. Right. History. Generally, what's been happening, we've been involved in the business for well over 100 years. We've actually drilled our first well in 1865, which is actually before the Americans drilled their first well in Pennsylvania. Essentially, Walter Darwin drilled the first well in Aripero in 1865. Also drilled wells at Labre, did some small exports, but after he died in 1868, nothing much was really happening in Trinidad's oil industry until John Leland discovered oil in his land, and together with Randolph Frost, decided to try to develop that oil he found in Guayguayari. And even though neither Russ nor Leland actually made a lot of money from that, they actually did enough to convince other people that there was money to be made in exploring oil in Trinidad. And by about 1908, regular oil production and exports from Trinidad and Tobago began. And this was actually pretty important because at the time we were a colony of the United Kingdom, and at the time the United Kingdom did not have a lot of colonies with oil deposits. So that became important, especially critical in the context of World War I and World War II to this extent. In terms of the historical highlights, it's just generally some important dates that I'm just going to go through. Like I said, the presentation will be available after. So I'm just going to touch on a couple of things. 1857, we drilled the first oil somewhere in the vicinity of the Pitch Lake. 1866, Aripero, a successful oil well. By 1886, we had some electrification. By 1901, Russ and Leland had drilled and tested a well in Guayguayari, and by 1904, we had actually set up a mines department. By 1908, commercial oil production began in Guapo, in South Trinidad. Skipping forward, by 1953, we actually started to produce electricity using natural gas in Pinal. By 1954, use it in cement manufacturing. By 1959, we started to use it in petrochemical manufacturing, actually used by the old petchem company, natural gas was actually used as a feedstock for ammonia. By 1963, the Port of Spain chemical plant began operations using gas-fired turbines, and later on in that decade, we actually found significant reserves of natural gas off the east coast of Trinidad, such that by about the early 70s, we actually also found significant reserves of natural gas off the north coast of Trinidad. So pretty much by 1974, when the price of oil tripled, we realized that we had a bonanza on our hands. So we convened a conference to decide what was the best way to use it. And coming out to that conference, it was actually decided that we would establish downstream petrochemical industries. So from 1975, we would have things like Point Lisas being started up, NGC being started up, and that type of sort of stuff. And pipelines being constructed to carry the oil from the fields to the end users. By 1977, we actually started up by building ammonia plants. So Trinidad 1 started up in 1977. By 1980, we were doing iron and steel, so we established Scott, which later became ISPAT, which later became Metal. By 1981, we had actually started to set up offshore platforms, the establishment of Fertilizer, which then became Arcadian, which then became PCS. And essentially by 1984, we got into methanol production, urea production. By about 1985, Trinidad and Tobago's economy started to slow down. So also the pace of development also started to slow down. So pretty much between 1985 and 1991, we actually didn't have a lot of investments. Just one ammonia plant, one gas liquids plant to pull out the heavier fractions, that's PPGPL, and we had the Trinidad investment, which promised a lot and eventually went out very badly for us. By about 1992, NGC was merged with NEC, and by about 1992 to 94, what happened was that as debts became due, we were forced to divest quite a lot of the assets that we collected at Point Lisas. By 1992, set up a new pricing regime to attract downstream investment. By 1992, we also had discovered enough gas to discuss LNG in addition to what we had done before. And pretty much by 1999, we had actually built an LNG plant. So it took us about 5 years. Actually built an LNG plant between 1999 and 2006. We'd actually built 3 more LNG plants. We'd actually done some further downstream expansion. And coming along to the present day, in 2010, we had the AUM complex, and 2011 completed some more pipelines. And last week, NGC managed to buy out Conoco's share of PPGPL for $600 million US. So essentially what's actually been happening is that we've got ongoing development in the sector over time. And why was this important? Actually pretty much because Trinidad and Tobago, by virtue of how it's been set up, has always been a dual sector economy. And what that pretty much means is that we've always had one dominant sector that tends to be very small, that generates most of the income, and over time it's generally been either some sort of agricultural product, whether it be tobacco, whether it be cotton, whether it be sugarcane, bananas, or cocoa. From about the 1950s, that switched from agriculture to extractive industries from oil. Probably from about the mid-80s to 90s, it was petrochemicals, and from 1999, it's actually been LNG. So pretty much, we've been an enclave. We've actually been an enclave, and we remain an enclave. In terms of our overview, because we've been a dual sector economy, what's actually happened is that we've had to formulate tax regimes and methods to transfer income from the small offshore sector that generates most of the money to the onshore sector where most of us reside and do our work. How we've managed to do that is that the state has managed to play a big part either by facilitating investment onshore and also by taxing revenues offshore. Pretty much that's been the case since 1974, and despite pretty much our best efforts, continues to be the case today. In terms of our dual sector, just to go through some of our characteristics, the petroleum sector, most of the investment takes place in this sector. However, growth and investment in this sector tends to be not dependent on the things that we can control, but are dependent on external factors and external prices and whatnot. And because we tend to not have ownership of the resources because of costs, good possibilities can be limited to services. Compare and contrast the non-petroleum sector, where a lot of times growth is dependent on petroleum and the growth in non-oil tends to be dependent on services. And compared to the petroleum sector, which is our big end sector, tends to be fairly underdeveloped. Okay, over time, what we've actually done is to get out of that monkey panza's whirl is to try to come up with new strategies for economic diversification. We've tried industrialization by invitation, which basically deals with inviting foreign companies to come, set up shop in Trinidad and Tobago, and by osmosis and by training of locals, we would actually transfer knowledge, transfer technologies that we then would be able to industrialize ourselves. Worked great for Singapore, didn't really work that great for us. Essentially what happened over time was that wasn't really working for us, in that we only managed to get a whole bunch of what we call screwdriver type economies that really didn't contain a lot of local value added. So basically what we switched to was something called import substitution, which basically tried to replace foreign imports with domestic production. That worked for a while, but also was not successful because nobody really wants a local substitute that's of not good quality, that's of not as good quality as a foreign article, and you're not really using your resources in the most efficient way. So essentially what we've pretty much settled on is some variant of resource-based industrialization, where we've had trade and economic policies trying to speed industrialization by doing things which you have a comparative advantage, whether it be oil, whether it be gas, whether it be the new sectors that the Ministry of Trade has identified, whether it be boating, tourism, festivals, that type of thing. But what that does imply is that you don't need to open up your domestic markets as well, so you also have quite a lot of foreign competition coming in. Fine. So essentially, there are a couple of ways you can actually reorient the economy. You can do it by trying to make the basket bigger, as it were. And for us, before Point Leases, we really didn't have a basket. So Point Leases was the catalyst for the reorientation. Point Leases was our effort to make a basket out of nothing. And essentially, the philosophy behind Point Leases was stated by Eric Williams, former Prime Minister, way back when in 1977. Essentially what he said was that because we had hydrocarbon resources of a particular level, we had a choice to make. We could have just sat back, exported the oil, exported the gas, do nothing, take the money and live well. Would have worked for a while. Government decided to not do that because we would have pretty much been on the dole and not been able to help ourselves. So what they actually did back then was to take a more difficult role, try to use the money as a catalyst to enter new industries where we may not have necessarily had a physical presence or any native advantages, and actually build it out of nothing. So it was very audacious at the time, and it pretty much did work for a while. And Point Leases is successful. Point Leases is actually a worthwhile model for countries starting off in an extractive sector, especially for a small developing country, and we actually do see a lot of other countries trying to emulate that success over time because it does work as a model. It may not necessarily work for your government, but it does work as a whole as a model for industrialization and creating a lot of value in the country. Okay, essentially, this map is just a breakdown of where our oil and gas reserves are. Pretty much, if you look at the map, you can see that most of our gas reserves are either off the north coast of Trinidad and Tobago or off the southeast coast of Trinidad and Tobago. With a couple of exceptions, most of our north reserves, most of the reserves of the north coast are actually used for LNG, while most of the reserves of the southeast coast tend to be used for both LNG and for downstream petrochemicals as well. The oil fields near Tobago have not yet been tapped as yet, so that's a coming future. In terms of gas use, Trinidad and Tobago tends to be a pretty unique model in that respect, in that we do not tend to increase our gas production unless there's a market for it. So in terms of our gas use, you tend to see gas use ratcheting up usually only when a new plant comes on stream, as is illustrated in the chart. And pretty much in terms of production, you tend to see the same trend. If you look here, production only tends to ratchet up when there's a new plant on stream. And whether that be BP, BG, EOG, whatever, or whether it doesn't matter what plant comes on stream, whether it's an LNG plant, whether it's a methanol plant, whether it's AUM, you tend to only see that ratcheting up. The decline in 2011 came about because of extensive measurements by our two main producers, where platforms were put out of commission for health and safety reasons and for upgrading to global standards. So we've had to shorten some of the production on those platforms. So we registered a bit of a decline in 2011. It's not shown on the chart, but 2012 production is about the same thing. By 2014, production should resume its upward trend. In terms of our gas reserves to production ratio, it does tell the same story in the sense that with new production, with new reserves discovered, our TP ratios tend to increase. When no new reserves are discovered, the reserves to production ratio tends to decline. What needs to be remembered is that it's not a static number, it's a dynamic number. If you find new reserves, it's going to change. If your rate of production changes, it's also going to change. So it's not a static number, it's not a final number. In terms of gas prices, or before this again, globally, the gas price that we would be most concerned with in the US is actually Henry Hub, because it does bear the closest resemblance to the netback price we will get for LNG. So generally, over the past couple of years, it's been pretty low, much lower than prices elsewhere. Finally, in terms of how it impacts our economy, significant impacts in everything except employment. Definitely in terms of exports, it's generally over 80%. Before LNG, before 1999, that percentage would have been somewhere around 50–55%. In terms of energy revenue, it's generally over 50%. And right, generally it's over 50%. Before LNG, that percentage of total government revenue would have been somewhere between 30 and 33%. And in terms of energy as a percentage of GDP, before energy, that would have probably been somewhere around 25 to 30% before 1999. Over the past 7 years or so, it's generally varied between 35% and 50%. Unfortunately, because energy sectors tend to be very capital intensive, it's not a major contributor to employment. So you generally find that energy employment remains somewhere between 3.0 to 3.9% as a percentage of total employment. It's not really going to move. We don't really expect it to move over time. We expect energy sector to impact employment in indirect ways, in the sense that sectors that provide inputs into employment will in fact be much more, would actually have much more people being employed. In the sense, things like transportation, things like storage, things like financial services, that sort of thing. Personal services, that sort of thing. So, significant impacts on the economy, and we expect that to continue. In terms of where we are now, quite a lot of energy-based plants in the country. One NGL plant at Phoenix Park, 4 LNG trains in Point Fortin, 10 ammonia plants, 1 AUM plant, 7 methanol plants, 1 urea plant, 4 DRI modules owned by Mittal, 4 power generation plants, 1 petroleum refinery, 1 cement plant, a lot of light industrial and commercial plants doing all sorts of things. So I'll get into that. In terms of ammonia, we've got 10 plants. It's the #1 exporter in terms of a single country size. 10 plants, like I said. Why is nitrogen needed? Generally, it's needed for agricultural use. There are lots of byproducts of ammonia, things like urea, nitric acid, sulfuric acid, UAN, basically used to make nitrates, sulfates, nitrates, things like ammonia, bleach, plastics, explosives, other type complex fertilizers, that sort of stuff. In terms of fertilizer companies that currently operate in Trinidad, we've pretty much got Yara, who also operate the Trinidad facilities. We've got PCS, you've got Point Business Nitrogen, you've got Caribbean Nitrogen, and you've got MHTL, the MHTL AUM plant as well. In terms of trade volumes, Trinidad and Tobago generally just over 30%, I would say 30%. Closely followed by Russia and the Ukraine. And Saudi Arabia and Indonesia also providing some inputs into the ammonia market, into the Asian market, with other producers taking up the thing. What affects ammonia prices? Generally, what's happening in agricultural markets. Good growing seasons generally lead to high ammonia prices. Bad growing seasons or seasons when not a lot of grain takes place generally leads to a decline in ammonia prices. That's apart from the usual supply and demand of ammonia from plants. What's been happening over the last 5 or 6 months? We've had a bad growing season because we've had a lot of inclement weather in our main growing areas, so prices are a bit down. Expect those prices to recover somewhat with the next growing season. That should probably start September, October. So, moving on from ammonia to methanol, which is pretty much our second big petrochemical. 5 plants. Again, we are the #1 in export from a particular site. Methanol value chain is quite a bit different from ammonia in the sense that methanol isn't demanded in and of itself. Methanol is only demanded for what it can produce. So we've got you've got your traditional derivatives, your formaldehyde, your acetic acid, you've got your gasoline additives, your MTBE, and and then you've got your new uses like your methanol in agriculture, you've got your gasoline, your MTOs, your biodiesels, that sort of stuff. In terms of end uses, you get resin, polyacryls, VAM, acetates, gasoline additives, fuels, olefins, where it's used, pretty much used everywhere. Construction, automotive, electronics, appliances, paints, insulation, pharmaceuticals, packaging, plastic bottles, solvents. In terms of your traditional uses for methanol, you've got formaldehyde, which tends to be used in pharmaceuticals, wood industry, particle board, cars. You've got acetic acid, vinegar, fleece, adhesives, paints. You've got DMT, plastic bottles, and you've got methyl chloride, which tends to be used for silicones. That's pretty much your traditional uses. In your non-traditional uses, you've got fuel blending, you've got DME, biodiesels, MTOs, that sort of stuff. Those are high growth potential markets. Again, just your rough illustration of all the things in your house that you can find methanol being used in, a lot of plastics, a lot of wood products. In terms of our methanol companies, pretty much limited to 2 sets. You've got Methanol Holdings Trinidad, which owns 5, and you've got Methanex, which owns Titan, and you've got Atlas, which is a joint venture between Methanex and BP, I believe. In terms of our methanol exporters, Trinidad and Tobago, once again, our leading exporter of methanol as of 2009, closely followed by Saudi Arabia and Iran. In terms of methanol demand, what's important to note is that out of the 61.4 million metric tons of methanol demanded, most of it comes from the Northeast Asia, which is pretty much China. Closely followed by North America. Methanol demand for traditional uses pretty much tends to follow economic growth trends. So in a case like methanol, where most of the demand comes from China and where China's been doing great growth over the past couple of years, methanol demand has been going great guns. Of course, what's going to happen now is that methanol demand has actually slowed down a bit now because Chinese growth has slowed down a bit. So you can actually see that reflected in our forecast price trend, where we see methanol prices easing up a bit from our highs. In terms of the LIC, the LIC is generally what we would call a catch-all term used for every use of Tobago that is not a major petrochemical or LNG. So that includes CNG, big thrust coming soon. That includes chemical used from like IGL and these sorts of people. You've got light manufacturing. You've got your food processing, your bread makers, your sweet makers, and this kind of stuff. You've got some use in construction. You've got some use in cooling still, and you've got some use in other commercial use. Intermediate petrochemical opportunities available. For Trinidad, we want to go down the value chain a bit and not just produce ammonia and methanol products. So the opportunities generally are in the downstream areas, whether it be resins, acetic acid, VAM, in terms for methanol, and in terms of ammonia, you've got melamine, nitric acid, ammonium nitrate, UAN, urea, that sort of thing, but not directly methanol and ammonia again. Just going to touch a little bit on power. As we know, TNTEC is responsible for the transmission and distribution. Transmission was broken out in 1994, so now we've got 3 independent power producers generally in Trinidad. We've got PowerGen, we've got Trinity Power, we've got Trinidad Generation Unlimited. And finally, our major revenue earner, LNG. 4 large trains, significant impact on the economy, both in terms of GDP, both in terms of foreign exchange generation, both in terms of public finances. Not a lot in terms of employment, however. In terms of our project milestones, between 1999 and 2005, we've managed to build between 1992 and 2005, we've managed to conceptualize and build 4 LNG plants, 4 major plants. Essentially, our plant owners have varied over time, with train 1 generally being a mix of gas producers, LNG buyers, and the NGC. Currently, those holdings are pretty much BP, BG, Shell, Toka out of China, and NGC. 100% gas coming from BPCC in terms of trains 2 and 3, currently owned by BP, BG, and Shell, with gas coming from BP and BG. And in terms of train 4, plant owners BP, BG, Shell, and NGC again. Train 4 tends to be the largest plant. In terms of our exports by country, we are not number 1. In fact, we are number 6. Qatar remains number 1 and will remain number 1 for the foreseeable future, given the large reserves of gas that they are sitting on. In terms of exports by region, what's happened over time is that as shale gas has become important in the US, our exports to North America have dropped off significantly. They have in fact been taken up by increased exports to South and Central America, and also increased exports to Europe and to a far lesser extent Asia. In the sense that, and while we're doing that, you can actually see we're doing that because in fact, outside of the US, LNG prices tend to be very, very generous. This chart came from the Federal Reserve in States, and as you can see, prices in the US tend to be just about $3, and outside the US, I think the lowest price is registered actually in the UK at just over $9. So actually, you're going to sell as much LNG as you can, where the price is better. So for us, that will be South America, to a lesser extent Europe, and where we can Asia. Okay, going back, this is just to put things in perspective. We do ship a lot of LNG to the US, which is represented in that gray slide there, but in terms of overall gas imports into the US, it's not a huge amount. In fact, the biggest chunk of gas imports into the US is still very much pipeline imports from Canada. So that just puts things into a bit into perspective. Right. So another way of doing it by diversifying is not by creating a basket, but we try to, in fact, make the basket bigger, which means that you've got a basket of goods, try to increase the size of the basket so that there's more stuff in the basket. How do we do that? Well, generally in our case, we've got to drill. How do we do that? We've got a lot of energy policy things to do to get that drilling going. That includes, in case of it's a multi-pronged project, you do some for oil, you do some legislative reform, you play with the tax regime, not play with the tax regime. You change the tax regime to make it attractive to investors. You increase your ANP or deep water, heavy oil. You increase your oil production, your EOR, enhanced oil recovery, heavy oil, these operators on farm outs. Maybe some rationalization in refining. In terms of gas, lot of aggressive exploration to improve our R2P ratio, lots of market growth, lots of diversification. And external thrust, try to get things going in other countries, and maybe there will also be a reform of the market model. I'm noticing I'm just going to go to the chart now. In terms of the oil fields of Tobago, what I will just say is that there's a couple small gas fields that may be somewhat close to Tobago. I don't think they've been actually detailed development of those fields as yet, but we know they exist. And I know I'm moving a bit fast, but unfortunately I've got limited time and I do have a lot to cover, and I apologize for that. Like I said, the presentation will be available after, and I will leave my email so you can send messages for clarifications and queries. Right. That being said, increased oil and gas activity is also one way that we can, in fact, increase the size of the basket. We've been doing a lot of this over the past couple of years. Well, more than the past couple of years. We've been doing a lot of that over the past, I would say, 5 years, 10 years. This can take several forms, by getting new players on board, signing new production sharing contracts, initiatives to deep water drilling, processing your seismic data, your existing seismic data, doing new bid rounds for oil and gas. We have a couple of bid rounds now open, doing additional exploration on onshore, and in fact, looking at doing things with Trinidad. We know there's a lot of proven heavy oil reserves in Trinidad, and we need to find new and innovative ways of getting that oil out of Trinidad, out of the ground and into the market. And so there are other energy policy things that you can do, things in power generation, things in alternative energy. In case of alternative energy, you actually are seeing some legislative things for alternative energy. You're seeing things for CNG. You're seeing a lot of fiscal policy reform, and you're seeing a lot of promotion of energy services in attempt, and also seeing a lot of leveraging of that local services sector to promote exports of services to other countries. couple of initiatives to enhance sustainability, regular new bid rounds in an attempt to ensure the replacement of used reserves, new projects downstream, training of people, etc. You do see it over time. Again, competitive bid rounds more recently. We've opened a deepwater bid round as of last month. There's a current onshore bid round going on. It is a lot of great activity in the sector. There's a lot of activity in the sector now, and the sector is actually much more active than it was 2 years ago. We're actually seeing a renewed focus on a lot of older acreage being redeveloped, land, shallow water, some stuff in the Gulf. Again, there's always ongoing look at the heavy oil deposits that we currently have. And in terms of the downstream, we're pretty much focusing on a couple of things. We're looking to add value, we're looking to do bidding processes for targeted projects, we're looking to do future linkages to local manufacturing. Very important. That one let me just go back to that one. This is just some of the things that we need to look at in terms of, this is what we actually will be looking at in terms of new gas projects. Not critical for all purposes, but if you've got a project that you want to do in Trinidad, it's pretty important for you. What's the global strategy? Well, there is one. There actually are some investment possibilities that exist outside of Trinidad and Tobago that may be for Trinidad. Maybe some midstream opportunities in pipelines and processing, and some other things. Why external? Pretty much because there are a lot of countries that are now establishing extractive industries on a global scale. You've got Tanzania, Uganda, Kenya, Mozambique doing a lot of initial and startup work to get their oil and gas sectors going, because they are now confirming large deposits, large commercial deposits, and they want to know how to do it. And a lot of them, they are coming to Trinidad to find out how we manage to do point research, and they're coming to Trinidad to set up relationships with us. In the more recent past, we've had opportunities in Ghana and Nigeria, limited success. In terms of the Caribbean, a lot of gas possibilities there. The gas pipeline that is proposed to go to Barbados initially still very much on the cards, to a lesser extent Suriname. I think we've signed some MOUs to go there. Okay, but one must be, in doing everything, one must be honest, and be honest about your strengths, your weaknesses, and your threats. The industry does have some strengths, but there are also a couple of weaknesses in the sense that gas moves are mature and the investments are cyclical. So when there's a downside of the cycle, the thing suffers. Couple of threats coming up like shale gas, new gas provinces, whether it be offshore Brazil, whether it be offshore the Gulf of Mexico, offshore West Africa, East Africa, and the sector is not necessarily as agile as it could be. So essentially, to deal with that, we've got basically two sets of strategies that we've employed in the last decade, whether from 2004 to 2010, you could call it Vision 2020, with the change of government that was scrapped. And we now have something called the Innovation for Lasting Prosperity. Detailed reading of these plans, a lot of very similar stuff in them, and with the same general aims. And the 7 interconnected pillars of sustainable development is the most recent variant of this. That's part of the Innovation for Lasting Prosperity. And will the strategy be successful? That pretty much depends on the execution of a coherent strategy. And what I would say is time will tell on that one. Finally, what I'm going to actually speak about is a gas value chain. Basically, a value chain is every point at which you can generate economic rent or economic value. And for us, our value chain for the gas sector is pretty simple. We've got our upstreamers that basically do exploration, production, compression. We extract value from those by production signing bonuses, taxation, lease signings, and that sort of stuff. We've got our midstream where we've got transportation, which pretty much is the transportation, marketing, and distribution. We extract value in that way through transportation tariffs via the pipelines and through extracting the heavier hydrocarbons from the gas by PPGPL, which then exports that for value. And of course, there are values to be derived downstream, whether it be by selling gas for power distribution, whether it be by selling gas as an input in petrochemicals, whether it be by selling gas for the LNG sector, whether it be by selling gas for heavy industry, whether it be by selling gas for exporters LNG. Still value to be gained there. In terms of LNG, LNG does have its own value chain, where you can derive values from things like marketing fees and regasification costs. I'm not going to go into that into too much detail today. This is just another way of looking at the value chain and where you can get the values. And pretty much headed down to the end now. Final takeaway, we still, after everything, after we try to do everything, we still pretty much heavily dependent on gas. We're still doing a lot with the resources that we have. We are creating value. We're pretty much punching above our weight in terms of population size, in terms of country size. But here's the thing though. The stuff that got us from point zero to where we are now, which is major player in the global gas business, isn't necessarily going to get us where we need to be in the future, which is to be an integral part of value, whether it be in partnerships with other countries or whatever. What we need at this stage is proper strategies, proper policies, and most importantly, proper execution. Where the next level is, the policymakers probably know that, but it's pretty much a multinational gas sector, which means that we've got our local firms having extensive interests outside, and we're being sustainable. We're extracting reserves and resources in a sustainable manner, in the sense that resources are being replaced and we're not wasting resources, and we're doing it as the investors like to say, win-win, so that the investors have a fair return and Trinidad and Tobago gets a fair return. How we do that? Again, execution. Who's going to do that? Well, over the past, I would say 10 years, we are seeing that second generation of folk heading out, retiring and stuff. So what we have is actually a new generation of people coming into the sector and doing that, taking on that challenge. It's going to take a lot of discipline. It's going to be a lot of hard work, but it's going to be done. If you don't do it, somebody else is going to do it for you. So that's pretty much it for me. Thank you very much. I know I haven't answered all the questions that we have, but send me an email. That's my email address. And if I can answer you, I will try to get the answer for you. If I don't answer you today, I'll try to get the answer for you. I'll get a good answer for you. Thank you for your attention. Thank you for your time. Let me just check. When will slides be posted? Okay. Slides should be up by tomorrow. My people are telling me here. So look out for that. It's not going up tonight. It's going to be going up tomorrow. So let me just go and check the chat to see if there's any questions I did not answer. We had a good bit of issues with audio. Hi Coyote, glad to see you, Tony. Okay. Like I said, we will have the presentation up after today, but it's probably going to be going up to tomorrow. And I suspect there is a record that's going to be available. And will we do this again soon? That's going to be pretty much up to what feedback we get from you guys. If you all like it, tell NGC you all liked it. Okay. Okay. Phoenix Park Valve Station upgrade. We're pretty much at the final stages of that. That should, we're hoping that will be finished before the end of the year. We're pretty much at the final stages of that. Like I said, we will be, like, I can't do the same presentation tomorrow, but there will be a video of the presentation, and you've got the email, you can send me a message. Okay, I did try to inform, hopefully I've cleared up some of the confusion, and hopefully it's been useful. Thank you very much, everyone. Take care. Have a good evening.